Imagine that you have just sold your Bitcoin. Your order is filled in less than a second. The coins disappear from your wallet. The cash appears in your account. For a brief moment, you feel something that resembles relief. Finally, the waiting is over. Finally, the uncertainty is gone. Finally, you no longer have to watch the market every hour, wondering whether the next candle will erase another piece of your confidence. But here is the question almost nobody asks. The instant you sold your Bitcoin, someone else bought every single coin you were willing to let go. Not tomorrow, not next week, at that exact moment. You believed selling was the right decision. They believed buying was the right decision. You looked at the same chart, the same price, the same headlines, the same economic environment, the same Bitcoin. Yet somehow, two intelligent people reached completely opposite conclusions. How is that possible? Most people answer this question far too quickly. They say markets simply need buyers and sellers. Technically, that's true, but it explains mechanics, not behavior. It tells us how a transaction happens. It tells us nothing about why it happens. And if you truly want to understand Bitcoin or any financial market, you have to stop asking shallow questions. Because better answers only come from better questions. Most investors spend their lives asking one question: where will the price go next? It sounds reasonable. In fact, it sounds like the only question that matters. But it isn't. The more important question is this: why do I suddenly want to sell now? Notice how different that feels. The first question looks outward. The second looks inward. One tries to predict the market. The other tries to understand the person staring back from the mirror. Because the greatest mystery in investing has never been Bitcoin. The greatest mystery has always been ourselves. Human beings like to believe we make rational decisions. We tell ourselves we sold because the market looked weak, because interest rates were changing, because inflation data disappointed, because the economy looked uncertain, because someone influential posted a bearish opinion online. Those explanations sound logical. They make us feel intelligent. But psychology tells a different story. Our brains are not designed to maximize wealth. They are designed to reduce pain. That distinction changes everything. Think back to the last time you watched Bitcoin fall day after day. At first, you were calm. It's just a correction. Then it dropped another 5%, still manageable. Then another 10. Now the optimism began to crack. Soon your social media feed became filled with fear. News headlines turned darker. Friends who had ignored Bitcoin for years suddenly started sending you articles explaining why it had failed. Every conversation reinforced your doubts. Every red candle whispered the same message. What if they're right? At some point, the financial loss stopped being the biggest problem. The uncertainty became unbearable. Because uncertainty is one of the most uncomfortable experiences the human brain can endure. If someone tells you that Bitcoin will fall exactly another 20% before recovering, the pain is surprisingly manageable. At least you know the ending. But if nobody can tell you whether tomorrow brings another crash or the beginning of the next bull market, your imagination fills the empty space with fear. The unknown is often more painful than reality itself. This is why investors don't simply sell because prices fall. They sell because they can no longer tolerate not knowing. Selling becomes emotional anesthesia. It doesn't necessarily solve the financial problem. It simply ends the emotional discomfort. The relief you feel after selling isn't proof that you made the correct decision. It's proof that your anxiety has temporarily stopped. That is a dangerous difference, because relief and correctness are not the same thing. Now think about the chart itself. Most people believe a Bitcoin chart is simply a visual record of supply and demand. That is true on the surface, but beneath every candlestick lies something much deeper. Every green candle represents confidence growing. Every red candle represents confidence fading. Every sudden rally awakens hope. Every sharp decline awakens fear. The chart isn't merely recording transactions, it's recording human emotion. Millions of decisions, millions of expectations, millions of doubts, all compressed into lines and candles moving across a screen. And over time, something remarkable begins to happen. The chart seems almost alive, not because it possesses intelligence, but because collective human psychology follows surprisingly predictable patterns. Have you ever noticed that Bitcoin rarely moves in a way that satisfies the largest number of people? When everyone expects an immediate rally, it often goes sideways. When everyone believes the worst is finally over, another painful drop appears. When investors become convinced that Bitcoin is dead, the recovery quietly begins. It's almost as if the market enjoys frustrating everyone. Of course, the market has no emotions. Bitcoin has no intention. The chart isn't trying to hurt you, but human psychology creates an outcome that feels almost designed. Price doesn't simply move. It stretches patience. It tests conviction. It challenges belief. It forces people to question everything they thought they knew. A quick crash is painful, but a long period of uncertainty is often far worse. Imagine waiting for months. Every small rally gives you hope. Every decline destroys it, again and again. Hope, disappointment, hope, disappointment. The cycle repeats until something inside finally breaks. Not your portfolio, your confidence. This is where many investors misunderstand what the market is actually doing. They think the market is trying to discover Bitcoin's value. In reality, the market is also discovering something else. It is discovering how much emotional pressure each participant can withstand. Every day you hold Bitcoin during difficult periods, the market asks you another question. Do you still believe? Not after the price doubles. Not after everyone agrees with you. Not after the headlines become optimistic. Do you still believe now? When nothing feels certain, when your account is shrinking, when your family questions your decision, when experts laugh, when social media declares Bitcoin finished for the 100th time, that is the real examination. And most people fail it, not because they lack intelligence, not because they lack education, because they eventually become exhausted. There is an enormous difference between being wrong and becoming tired. Many investors don't sell because they suddenly discover Bitcoin is worthless. They sell because they cannot carry the psychological weight any longer. The chart didn't defeat their analysis. It defeated their endurance. That is an uncomfortable truth, because it means many selling decisions are not born from new information. They are born from accumulated emotional fatigue. The market understands something that most people overlook. Time itself is a weapon. If fear cannot force you to sell today, perhaps boredom will next month. If panic cannot convince you, maybe endless sideways movement will. If neither works, perhaps watching everyone else appear successful while you wait patiently will. Price doesn't always need to collapse. Sometimes it simply needs to keep asking the same painful question until your answer changes. This is why understanding Bitcoin requires more than understanding technology, more than understanding economics, more than understanding monetary history. You must also understand yourself, because every chart becomes a mirror. It reflects your fears, your hopes, your impatience, your confidence, and eventually your breaking point. So before asking where Bitcoin goes next, ask something far more uncomfortable. When I feel the strongest urge to sell, whose decision is this? Is it truly mine? Or has the chart, through weeks or months of carefully accumulated emotional pressure, finally succeeded in making me surrender? Because the answer to that question may reveal far more about your future than the next candlestick ever could. While you are convincing yourself that selling is the only rational choice, someone else is quietly doing the exact opposite. They are buying. Not because they failed to see the same chart, not because they ignored the same headlines, not because they somehow possess secret information unavailable to everyone else. They saw everything you saw, yet they reached a completely different conclusion. That should make us pause. Because if two people can observe exactly the same reality and make opposite decisions, then perhaps the market is not revealing the truth. Perhaps it is revealing each person's relationship with uncertainty. Think about that for a moment. When you sold your Bitcoin, you probably believed you were escaping risk. The buyer believed they were embracing opportunity. The price was identical. The asset was identical. Only the interpretation changed. So the real question is no longer, who is right? The better question is, why do they see something that I don't? This is where time quietly enters the conversation. One of the greatest illusions in investing is believing that everyone participates in the same market. They don't. A day trader is not living in the same market as a long-term investor. A hedge fund is not living in the same market as a nation-state. Someone saving for retirement is not living in the same market as someone trying to make rent next week. They all buy Bitcoin. They all sell Bitcoin. but they are playing entirely different games. Imagine two people standing on the same beach. One is watching the next wave, the other is watching the tide. The first person believes everything is changing every few seconds. The second knows the ocean is moving in a direction that cannot be understood by looking at a single wave. Bitcoin is remarkably similar. Many people sell because they are trapped inside today's candle. Others buy because they are looking at the next decade. Neither person is necessarily more intelligent. They are simply measuring time with different clocks. That difference changes everything. History repeatedly shows that Bitcoin has experienced extraordinary volatility. It has fallen by more than 80%. It has been declared dead hundreds of times. Every major correction has produced convincing arguments explaining why this time was different. Every cycle created reasons to panic. Every cycle created reasons to quit. And yet something extraordinary kept happening. Bitcoin continued to exist. Blocks continued to be mined. Transactions continued to be verified. The network continued to operate exactly as it had before. Price collapsed. The protocol didn't. Markets panicked. Mathematics didn't. Public opinion changed. The rules remained exactly the same. This is one of the most misunderstood characteristics of Bitcoin. People often confuse price with reality. They believe a falling price means a weaker network. But those are completely different things. Price reflects opinion. The protocol reflects truth. Opinion changes every minute. Truth changes only when the underlying rules change. That distinction is enormous. Because once you begin separating price from reality, your questions begin to change. Instead of asking, why is Bitcoin falling? You begin asking, has anything fundamental actually changed? Sometimes the answer is yes. Many times the answer is surprisingly no. This is why asking the right question matters so much. Human beings naturally ask questions that confirm their emotions. When we become afraid, we ask, how low can this go? When we become excited, we ask, how high can this go? Notice that both questions begin with emotion. Neither begins with understanding. The quality of your questions determines the quality of your thinking. If you ask fearful questions, you usually receive fearful answers. If you ask emotional questions, you usually make emotional decisions. But if you ask better questions, something remarkable happens. Instead of asking, should I panic because the price is falling? You ask, who is willing to buy while everyone else is afraid, and why? Instead of asking, why is everyone selling? You ask, what do they know? Or perhaps what pain are they trying to escape? Instead of asking, what will happen tomorrow? You ask, what remains true regardless of tomorrow? Those questions lead somewhere entirely different. Because truth rarely announces itself with excitement, it usually hides beneath emotion. Most investors spend years studying candlestick patterns, support levels, resistance levels, indicators, oscillators, moving averages. None of those tools are useless. But there is another chart that receives far less attention. The emotional chart, the invisible chart, the one measuring confidence, patience, fear, exhaustion, and conviction. That chart often explains price movements long before technical indicators appear to. The market has an extraordinary ability to pressure human psychology, not because someone is controlling every movement, but because uncertainty naturally exposes emotional weakness. The chart keeps asking the same question in different forms. How certain are you? If your confidence depends entirely on green candles, eventually a red one will shake it. If your conviction depends on public approval, criticism will eventually destroy it. If your belief depends on immediate rewards, waiting will become unbearable. Bitcoin has an unusual way of exposing the foundation beneath every investor's confidence. Some people discover they believed in Bitcoin. Others discover they only believed in rising prices. Those are not the same thing. The strongest buyers are rarely the people who believe Bitcoin can never fall. They understand perfectly well that it can. In fact, they often expect it. The difference is that they accepted the possibility of pain before they entered the position. Most sellers accept pain only after they experience it. That small difference creates dramatically different behavior. Preparation changes perception. If you expect volatility, volatility feels normal. If you expect certainty, every correction feels catastrophic. Perhaps that is the greatest lesson Bitcoin teaches. Not how to predict the future, but how to live with uncertainty. No one knows exactly where Bitcoin will trade next month, No one knows the precise timing of the next cycle. No one knows which headline will dominate next week. But uncertainty is not evidence that something is wrong. It is simply the price of participating in a system where nobody controls the outcome. And maybe that is why Bitcoin feels so psychologically demanding. It refuses to give you constant reassurance. It refuses to reward impatience. It refuses to remove doubt. Instead, it quietly asks the same question over and over again. What is your conviction actually built upon? If the answer is price, your conviction will rise and fall with every candle. If the answer is headlines, your confidence will disappear whenever public opinion changes. But if your conviction is built upon understanding how Bitcoin works, why it was created, what problem it attempts to solve, and why millions of people continue choosing it despite extraordinary volatility, then the chart begins to lose some of its power over your emotions. Not because the price stops moving, but because you stop allowing every movement to redefine your beliefs. This brings us back to the question that opened this video. Why are you selling, and why are they buying? Perhaps the answer has very little to do with Bitcoin itself. Perhaps it has everything to do with what each person believes about the future, about money, about risk, and about uncertainty. The chart did not force either decision. It simply revealed two different minds responding to the same reality. And maybe that is the deepest truth of all. The market is not merely a machine for discovering prices. It is a machine for discovering people. It reveals who acts from fear, who acts from patience, who follows the crowd, who can stand alone, who seeks certainty where none exists, and who has learned that understanding is often more valuable than prediction. So the next time you feel an overwhelming urge to sell your Bitcoin, pause for just a moment. Do not ask where the price will be tomorrow. Do not ask what the headlines will say next week. Instead, ask yourself one simple question. Am I responding to reality? Or am I responding to the emotions that the chart has patiently cultivated inside me? Because the chart has a remarkable ability. It knows how to torment investors. It knows how to stretch fear. It knows how to keep hope alive just long enough to break it again. It knows how to exhaust people until surrender feels like wisdom. And perhaps the greatest irony is this. The moment many people finally surrender is often the exact moment someone else quietly begins to accumulate. Not because they know the future, but because they asked a better question.